Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Asia stocks start the week mixed as reports emerge. China will begin selling $138 billion in ultra-long bonds. Traders look ahead to US CPI data due out later this week. President Biden set to quadruple tariffs on Chinese EVs and sharply increase levies on other key industries as Washington's trade battle with Beijing intensifies. Plus, leadership shake-up. Russian President Vladimir Putin replaces his long-serving defense minister. An unexpected changing of the guard more than 2 years into Moscow's invasion of Ukraine. Let's check in on these markets then. A big week on the data front, of course, with the focus firmly on that inflation print out of the US coming through on Wednesday. Before you get there, you get earnings and wages out of the UK. That'll give some indication as to whether or not the BOE has that pass to go in June. That is not yet consensus, but of course the messaging from the Bank of England has become more dovish. To the European futures picture, you're looking at gains of 0.1%. By the way, after European stocks hit a fresh record on Friday, FTSE 100 futures pointing lower by 0.2%. S&P futures, you're back above that 5,200 level. How much support is that now for the S&P? On the futures picture, looking to gains of just 0.1%. Nasdaq futures back above 18,200, looking to add 0.2%. Let's flip the board cross asset then, with the build-up, of course, to that CPI print out of the US on Wednesday. You're going to get Fed speakers as well. Jay Powell's going to be speaking, as are another two members of the FOMC, voting members as well. The 2-year currently at 4.85, 125 on pound US dollar as we lead up to that data out of the UK on Tuesday. $85 a barrel on Brent, down 0.3%. Some of that tied to maybe the softer data out of China over the weekend, particularly when it comes to the impulse on credit lending. Gold at 2,354, currently just down 0.2% on the yellow metal. Let's cross over to Asia now, where Avril Hong is standing by in Singapore. Avril, what is standing out to you across the Asia markets this morning?
Yeah, a couple of things here. We are seeing a big mixed bag as far as equities are concerned. The focus shifting to the US CPI numbers later in the week. But ahead of that, we did get China data on the credit as well as inflation front. Things looking weak and just pointing to the fact that Chinese authorities really struggling to revive demand. But I think the past 2 hours or so, the focus has also shifted to China saying that it'll issue ultra-long sovereign bonds. And the idea here is really to help raise funds to support the Chinese economy. And as our strategists have been pointing out, this could be a way for China to raise funds for fiscal stimulus without leading to a higher fiscal deficit ratio. So that's helping some of the sentiment. You can see the CSI 300 just tick slightly higher into positive territory. Hang Seng also moving on up. They've both moved off their session lows on the day where Asian equities are still under pressure. Let's flip the board and take you to what we're seeing across assets in China and Japan as well, because the yuan is really in focus. We've been seeing it pop above the 724 level on offshore yuan against the greenback as the trade, or rather the data out of China weakens, the expectation being fueled that we'll see more policy easing from authorities. Add to that what we're seeing out of US-China tensions and the threat of tariffs. I want to highlight also we're seeing bonds in Japan coming under pressure. The BOJ today did reduce its bond purchases, and the idea here might be that it's testing the water before it starts scaling back its role in the debt markets in the country. So this is what we're seeing in the region today, Tom.
Avril, you touched on those sanctions coming through from the US then. They haven't been confirmed yet, but the expectation, of course, is that Joe Biden will be announcing those later this week. And one component of that is the quadrupling of tariffs on the Chinese EV sector, sales into the US, which are pretty minimal at this point. What is the market reaction so far to the broader increase in sanctions that we are expecting, tariffs, I should say, later this week from the US president?
Yeah, I think we're already seeing how the Chinese EV makers have been selling off today, despite the lack of confirmation of this report. And in many ways, this is also a continuation from our reports last week. This is not entirely unexpected. Perhaps what is catching our eye is how it's a quadrupling of these tariffs on Chinese EVs and potentially much higher levies also on other strategic products. But something worth noting here is also So the audience that Biden might be seeking and pushing through these moves, it will be potentially announced at a White House event. So this could be geared and framed towards defense of American workers. And as you alluded to right there, that for the Chinese EV makers, the US is already a very small market. They've been locked out of that years ago, no thanks to tariffs. Still, we're seeing a bit of that reaction in the EV stocks as well as solar firms today, Tom.
Yeah, the politics certainly not far away when we think about those November elections in the US, of course. Overhong, thank you very much indeed, breaking down the details there in terms of those potential additional tariffs and the broader market reaction so far this Monday. We're going to hear more about the state of US-China relations and China's overcapacity issues from the US Treasury Secretary. Janet Yellen's exclusive interview with Bloomberg TV and radio coming up later today. We are, of course, looking ahead to key US inflation data on Wednesday, as I flagged. Bloomberg Economics expects April's CPI number to show a marginal improvement from March, with bond traders on edge ahead of the highly anticipated reading. For more, let's bring in Bloomberg's MLive strategist, Mark Cranfield. Mark, why the investor focus on this inflation print out of the US this week? Why is it so central to the markets at this point?
Well, investors care a lot because the Federal Reserve care a lot about these numbers. And they were wrong-footed earlier in the year with the way in which the CPI came in hotter than expected, and that disrupted the bond market and the foreign exchange especially. So if you think back, it was only a few months ago that the 10-year Treasury yields were below 4%, and that pretty much followed the slightly dovish outlook that Federal Reserve Chairman Powell gave in December. But of course, we've had a complete change over the past 2 months. Both the March and the April data which came out for CPI, both of those triggered considerable changes in the bond market. Yields jumped in both cases, the dollar got stronger, and there was a lot of read-through across other asset classes as well. So the volatility around the specific days when the CPI report comes out have been pretty high in recent months, mostly because the numbers have been hotter than expected. So although we do expect something to be more in line this time around, nobody's going to be that confident that they can go into the CPI report with their eyes closed. People need to be on alert for even small changes because the read-through is pretty quick into what the Federal Reserve have to say. And as you were mentioning, there will be several Federal Reserve speakers this week. So we'll get a pretty quick feedback from what they think about the numbers as well.
OK, so investors need to be on alert ahead of that CPI print on Wednesday. Which asset class, then, is likely to be most sensitive to this print, Mark?
Probably initially it's going to be the foreign exchange market. And if you think back just to the report that came out in April, that was the trigger for dollar-yen going towards 160. We finally broke through 152, which had been a barrier for some time. Dollar-yen continued north, eventually getting to 160, all because of the CPI report, really. And that really exemplified the difference between the yields in Japan and those in the United States. Of course, Treasury yields haven't recovered either. We're about 4.5 now on the 10-year yield, and we were considerably lower before the previous CPI report. So obviously the bond market cares a lot about it as well. Equities seem to be better at shrugging it off, which seems to think that they, unless the inflation numbers really deviate a lot from the kind of 3% kind of area, equities don't mind because they've got the AI narrative to rely on. Earnings have been decent and the jobs market is still pretty strong. So equities are probably the least concerned about what happens to the CPI. But of course, if the Fed speakers turn very hawkish and they threaten to raise interest rates again, everybody will be worried about that. But that's not the base case, especially according to Jerome Powell recently. He thinks there's a very high bar to raising rates again.
OK, Bloomberg's MLive strategist Mark Cranfield setting us very nicely up for that, of course, inflation data out of the US on Wednesday. Mark, thank you. On the earnings front and out of South Africa, one of the largest telecoms networks and providers in and on the continent of Africa, Vodacom coming through with earnings. It's a miss in terms of the earnings per share for Vodacom. Full year earnings per share coming in 8.46 Rand. The estimates had been for 9.21 Rand. On the revenue front, it was a beat, modest beat, 150 billion Rand. The estimates had been for 149 billion Rand. But again, it's the earnings per share where you're seeing the miss, and the full year dividend per share as well coming in below the estimates, which is likely to be a disappointment for investors, of course. 5.9 Rand dividend per share full year. The estimates had been for 6.35, 6.35. Right, the Russian President Vladimir Putin has replaced his long-serving defence minister with his former economy aide. The surprise cabinet reshuffle signals a focus on growing the Russian war economy, more than 2 years, of course, after the invasion of Ukraine. Let's get more on this story with Bloomberg's Greg Sullivan, Russian economics and government reporter in Dubai. Greg, what is behind these personnel changes then?
Well, as you said, it does signal a focus on the war economy. Belousov was very instrumental in helping put Russia on a war footing in its economy, and it really does underscore just how important that is for Vladimir Putin. You know, after the early days where there were missteps in the war, Russia did get onto transferring its economy into a mode that really has weathered sanctions. And part of that is because of the industrial production from the war. It also shows that Putin is trying to exert some control over the defense apparatus. Again, there were early missteps. The war was supposed to last a few days, and it's now entering its third year. And that economy is going to be critical to keeping Russia able to fight, but also able to weather the sanctions and continue to keep Vladimir Putin happily in power.
Greg, what were some of the other significant changes or men being kept in place? Largely men, isn't it, currently at the top of the government in Russia? Some of the major changes around personnel, other names that stood out to you?
Well, what's interesting is that there's largely been a lot of continuity. In other areas of the government, ministers have remained the same, including the prime minister. But the defense minister, Shoigu, as well as the Security Council chief, Patrushev, have both been replaced. With Shoigu, it's not that surprising, given that there were early missteps in the war. There was also a corruption scandal last month where one of his key deputies was arrested. And of course, we all remember the June mutiny led by former mercenary chief Yevgeny Prigozhin. Prigozhin said that one of his stated aims was to replace Shoigu, who faced criticism for the way that he handled the war. So it's interesting here that the focus has been on the defense, on the people managing the war, and clearly given Putin wants to see a change there, and this was a logical time to do it right after his re-election.
Greg Sullivan, thank you very much indeed, joining us out of Dubai, Russian economics and government reporter, on the details around some of those significant changes at the top of the power structure, of course, in Moscow. Greg, thank you. Here's what else to be thinking about today then. In fact, this week, I should say, we've been talking about the US inflation data. Before we get there, as I flagged, it's the jobs data, particularly on the earnings and wage front, that comes out tomorrow in the UK. How that ties into the thinking of what's sounding like an increasingly dovish BOE as well. Is June, and will it keep June a live meeting for the Bank of England? So that data crossing on Tuesday, tomorrow. On the earnings front, we're going to get Vodafone, Deutsche Telekom as well. So the telecom providers in Europe, some of the big names crossing with their numbers as well this week. And then, of course, on Wednesday, it is the big one in terms of the data front for investors. We've been unpacking this for you. The US CPI, with core expected to edge down to 0.3% in April from 0.4%. And, of course, markets will be on edge ahead of that data print on Wednesday. Coming up, Johan Van Overtveldt, the member of the European Parliament and former Belgian finance minister, joining us for a conversation ahead of next month's elections across the EU. That interview just after 6:30 a.m. UK time. Also ahead, French President Emmanuel Macron speaking exclusively to Bloomberg's editor-in-chief John Micklethwaite. Hear that interview 6 p.m. UK time. Plus, Goldman Sachs CEO David Solomon joins us also for an exclusive conversation as he takes part in the Choose France Summit. That conversation starts at 3:30 p.m. UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US Secretary of State Antony Blinken says Israel risks fueling a Hamas insurgency in post-war Gaza. It's the latest warning, of course, in a steady escalation of US concern about Israel's conduct in its fight against Hamas.
Israel's on the trajectory, potentially, to inherit an insurgency with many armed Hamas left, or, if it leaves, a vacuum filled by chaos, filled by anarchy, and probably refilled by Hamas.
OK, let's get more on this then with Bloomberg's Sam Dagger, our Middle East economics and government reporter, joining us out of Dubai. Sam, what do you make of these comments then from Antony Blinken, the Secretary of State, around the risks of an insurgency?
Hi, good morning, Tom. Almost really prophetic. I mean, like as he was speaking, almost instantly, we had reports from the Associated Press about renewed fighting in northern Gaza. I mean, remember, this is the area that Israel invaded at the start of its operation, immediately after the October 7th attack on Israel by the militant group Hamas. So there are reports of renewed fighting in an area called the Jabalia refugee camp in northern Gaza, and also in a neighborhood called Az-Zaytun near Gaza City. I mean, it is almost like the whack-a-mole phenomenon here, at play. So really, Blinken's comment very much on point here.
And meanwhile, hundreds of thousands of people fleeing from Rafah, having received those warnings from Israel. What is the detail? Do we know where they're moving to? What is the situation on the ground for those civilians?
I mean, we have a great story on the terminal by our colleague Faris Akram. He is from Gaza, but he's reporting from outside Gaza and speaking directly to civilians on the ground. So we have hundreds of thousands of people moving to an area called Al-Mawasi, which is near the town of Khan Yunis. This is also an area that Israel had targeted in the past. So these people are moving basically to an area of shattered cinder block and twisted rebar. They're pitching their tents, some of them, amidst the rubble of their own homes. They're joining about 500,000 people already in that area living in tents. I mean, our colleague Faris reports that the price of tents in Gaza has gone up to almost $1,000. I mean, can you imagine $1,000 for a tent? Wow.
Meanwhile, Sam, in terms of those ceasefire talks, are they still ongoing? Has the hope of a ceasefire been sidelined completely, or are there still suggestions that maybe these conversations can move things forward?
No, I mean, for all intents and purposes, I mean, the ceasefire talks, which were taking place in Cairo, are paused. On the U.S. side, they were led by CIA Director William Burns, meeting with his counterparts from Egypt, Israel, Qatar, and officials in the region were actually pinning a lot of hope on these talks, particularly because of the respect a lot of people in this region have for Burns. We also have a story about Burns's role on the terminal. So all eyes were on Cairo, but obviously all of that was interrupted by, Israel rejecting, the terms of the deal and commencing its operation in Rafah. Egypt has come out, and said it may actually join South Africa in its genocide case against Israel at the International Court of Justice. I mean, that's really something, because remember, Egypt was one of the first Arab countries to make peace with Israel, and officials in that country are also warning that the peace deal may be at risk now because of Israel's actions.
OK, Sam Dagger, thank you very much indeed. And the latest, of course, on the region, our Middle East economics and government reporter joining us out of Dubai. Let's check in on the oil price then as we link that to the geopolitics and the crisis that, of course, continues to unfold in the Middle East. $82.47 on Brent, down 0.4%, $78 a barrel, so comfortably below that $80 barrel on WTI, down 0.3 in the session today. Arguably, it's the China data over the weekend that is pressuring oil prices in the session today, given that credit data came in very, very weak indeed, and further signs of that disinflation impact in terms of the data out of the factory prices of China. Again, $82.46 on Brent, down 0.4%, WTI at $78 a barrel, down 0.3 in the session. The Middle East will be in focus at the Qatar Economic Forum, QEF 2024, which begins in Doha tomorrow, by the way. We're going to be speaking to global political players such as the Qatari, Polish and Malaysian Prime Ministers, the Saudi Finance Minister and the Governor of the Turkish Central Bank. So do tune in for all of those conversations. Plenty more coming up. This is Bloomberg. Welcome back. Happy Monday. Welcome back to Bloomberg Daybreak Europe. Now to some of the other stories making news this Monday. In the UK, Prime Minister Rishi Sunak will attempt to reframe the upcoming general election with a focus on security in a speech later today. Sunak will pitch himself as the best candidate to achieve a, quote, more secure future for Britain. It comes just over a week after his ruling Conservative Party suffered heavy losses in local council elections. Tesla is facing further protests at its factory in Germany, where activists are trying to stop an expansion that would require razing part of the surrounding forest. Police say at least 16 people were arrested on Friday following actions including breaking into an airfield, damaging new Tesla vehicles and blocking a road by the factory. France says Amazon, Pfizer and Morgan Stanley are among the companies poised to boost their presence in the country. It expects a flurry of new foreign investments to be unveiled today, topping last year's $14 billion. President Emmanuel Macron is hosting 180 CEOs and executives this week in a push to reindustrialise France and make it a financial hub for the post-Brexit EU. And by the way, a line crossing just in the last couple of minutes ago from Le Figaro, of course, the French newspaper, reporting that Microsoft will be investing more than 4 billion euros in France. And a reminder, French President Emmanuel Macron will be speaking exclusively to Bloomberg from the Choose France Summit. You can hear that interview with John Micklethwaite, Bloomberg's editor-in-chief, 6 p.m. UK time. But before that, don't miss our exclusive interview with US Treasury Secretary Janet Yellen. That conversation kicks off at 3 p.m. UK time. All right, let's check in on the Asian markets then, as, of course, investors have been adjusting to the weakest aggregate financing impulse in about 19 years out of China. So the weakness, the softness in terms of the liquidity and the demand for that credit is pronounced. Meanwhile, you had further signs that the deflation story in China has yet to abate. And then on top of that, the most recent news, and this came through in the last hour or so, that China will be issuing these ultra-long bonds. So we've seen a bit of a whipsaw in sentiment because that expectation on those ultra-long bonds, 20, 30 and 50-year bonds, will do something to open the fiscal spigots in China. The CSI 300, the benchmark, currently just up 0.1%. The Hang Seng over in Hong Kong gaining 0.7%. Over in Japan, the Nikkei, of course, the benchmark there, currently down 0.3%. News as well, of course, that the Bank of Japan has been reducing its bond purchases, so you've seen a little bit of move higher in yields and a little bit of support for the Japanese yen. The Nikkei, though, down 0.3%. The MSCI Asia Pacific currently flat at 177.53. Coming up, we're going to talk EU elections, I should say, with Johan Van Overtveldt, the member of the European Parliament and former Belgian finance minister. Stay tuned for that interview. That is next. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda. Asia stocks start the week mixed as reports emerge. China will begin selling $138 billion in ultra-long bonds. Traders, meanwhile, looking ahead to US CPI data due out later this week. President Biden is set to quadruple tariffs on Chinese EVs and sharply increase levies on other key industries. That's as Washington's trade battle with Beijing intensifies. Plus, leadership shake-up. Russian President Vladimir Putin replaces his long-serving defense minister. It's an unexpected changing of the guard more than 2 years into Moscow's invasion of Ukraine. Let's check in on these markets then, and worth reflecting on the fact that the S&P notched up gains of just shy of 2% by the end of the last week, back above 5,200. Currently, European futures, after notching record highs by the close on Friday, are looking to add about 0.1% in the session so far. That's what's been flagged by the European futures. It is a massive week for data, arguably the focus shifting away from the earnings story and onto the data front. Yes, we have, of course, the US inflation print out on Wednesday, with core inflation month on month expected to edge down from 0.4% to 0.3% for the month of April. But you also have, before we get there on Tuesday, wage data, earnings data out of the UK, 7 p.m., 7 a.m. UK time tomorrow, and how that ties into expectations around the Bank of England. The FTSE 100, meanwhile, today looking at losses of around 0.2%. Oil may be a factor there. Oil is a little weaker in the session. And then, of course, the softness in the China data, particularly in terms of aggregate financing, contracting for the first time on record. So that could be a bit of a drag in terms of the UK session today. S&P futures still holding about that 5,200 level, looking to add 0.1%. Nasdaq futures pointing higher by 0.2%. Let's flip the board cross asset then and just meditate briefly on what's happening with the 2-year in the US as we look ahead, of course, to that inflation print. 485 currently. How much volatility is there going to be around the treasuries, particularly at the front end on the back of that inflation print coming out on Wednesday? 125 on the pound. That could move tomorrow on the wage and inflation data, the wage and earnings data, I should say, out of the UK. Brent, $82 a barrel, 43. I talked about the softness there coming through for oil, currently down 0.4% in the session today. And gold, 2,352. Look at that, 2,352, down by 0.3%. But the strength that's come through for the yellow metal year to date has been pronounced, hasn't it, as a potential head. In terms of some lines crossing right now, and we talked about the fact that the BOJ has adjusted its bond purchases. Japan's 30-year yield rising to 2.03%. That is the highest since 2011. So the 30-year yield in Japan rising above 2%, 2.03%. That's the highest since 2011, again, after the BOJ adjusted its purchases, reduced its purchases of bonds. And you did see a little bit of strength on the yen on the back of that and selling pressure across Japanese bonds on the back of that announcement. Currently on the yen, 155.82. Not a lot of movement there, but again, it did strengthen on the back of that news. And that's the redhead, Japan's 30-year yield, now offering you a little over 2%. That's the highest level since 2011. Let's switch focus now to European politics. It's a big year, of course, for elections across the continent. Elections to the European Parliament due to be held next month, with the bloc's once surging far-right groups starting to stumble in the polls. This comes as Ursula von der Leyen floats the prospect of working with some nationalist parties to ensure a second term as Commission President. Bloomberg's Oliver Crook is in Brussels with a guest to unpick some of the political evolution that is transpiring in the Eurozone. Ollie.
That's right. That's right, Tom. We're joined by Johan Van Overtveldt, who's from the new Flemish Alliance. He's also a member of the European Parliament and chairs the all-important budget committees within the European Parliament and was formerly Finance Minister of Belgium, so as well across many of the topics that are most important to us here at Bloomberg. I'd like to begin just because now we're really getting into that period of time where we're very close to the elections. We're less than a month away. What do you see as the defining issues of the European election?
If I could name one or should name one item, it would be Ukraine, because it's of vital importance for the European Union and its existence into the future, its norms and values that we take for granted and that are now under fire, literally under fire in Ukraine. And linked to that is, of course, the necessity of for Europe to build up its own defense industry. These things come close together. They will require a lot of money. And so I think there are a lot of other issues too, like migration, the Green Deal, the competitiveness of the EU. But I think Ukraine will be the defining issue in the coming term of the European Parliament.
And how do you think that that changes over the next couple of years? And what kind? Do you think that there will be more commitment required from the Europeans, not just from a financial standpoint, but maybe from a military standpoint?
Well, it is to be feared that we go into that direction, that things might become very complicated for the Ukrainians, even with all the help that is now coming forward from the EU, from the United States. But like the French President Macron said, we might arrive at the point where they need more than just the financial assistance and the money to buy weaponry. That would be a very defining moment.
So you think that there's a possibility that European troops could be committed within Ukraine, that is a possibility that's on the table and that should be considered?
Well, I think realism imposes on us that we should consider it. Whether we should try to avoid it is, of course, also true. We should try to avoid it. But it would be irresponsible not to face up to it and take into account that at one point in time that might become a necessity.
And beyond the question of Ukraine, what do you anticipate the sort of policy consequences are going to be of this election in Europe? We see much further swing to the right, particularly with the ID. What do you think because it's hard for sometimes to think of theoretically, what are the actual policy implications of that?
Well, I think one of the major implications of the drift to the right, I hope the center right and not the extreme right, but we'll see what the election brings, will be, I think, more emphasis on economic policies. We've had in the past term a lot of emphasis on the climate policies and everything related to that. We've taken a huge step forward. I don't think it was always sensible to do it in the way that has been done, especially by Commissioner Timmermans. And so we have to adjust this policy to better take into account the social and economic consequences of these policies. And I think that will be a very important part of the shift that will take place in this new, more to the right oriented parliament.
And in this new orientation, do you see the EPP and the ECR as a likely sort of allies in that?
Well, I think we already saw that in this term, and especially in the second part of this term, where if you look at when we had to vote, you saw the two groups coming closer to each other. Not entirely, there are still a lot of differences, but the divergences were less outspoken than they were in the beginning of the term. So yes, that is certainly something that is quite possible, and that might change the overall picture of the way in which the European Parliament is going.
And we were talking just before in the break, talking about sort of the Hemingway adage of going broke slowly at first and then suddenly. This seems to be a lot of the sort of concerns in Europe about competitiveness and its future economic viability. Macron says that Europe is basically mortal. Do you think that that is a correct sort of characterization of what Europe
I think
is
mortal is, Mr. Macron has often used that kind of terminology. He declared NATO brain dead some time ago. I think today NATO is very much alive. So I hope we can say the same about the EU in 2 or 3 years' time.
But you wouldn't say it's brain dead.
No. But there certainly is a lot of work to be done. And the big challenge, if you talk about competitiveness, is of course what's happening in the United States with the inflation.
Well, so what do you think the correct response is? Because you have the Inflation Reduction Act in the United States. You have China very famously and historically supporting its industrial sector. What is Europe's response to that?
I think two things. First of all, we need to involve the private sector more than we did until now, from the point of view of the EU. The IRA in the United States is basically about tax breaks that stimulates the private sector to invest in the things you want them to invest in. We should do that too, but we don't have fiscal authority at the European level, so we need to stimulate the member states to do that kind of stuff at the national level. Secondly, talking about China, we should do what we have to do. If we want free trade, everybody has to play along the rules.
And so that means tariffs and
the Chinese are not playing along as the rules predict or oblige you to play the game. So we should take the consequences of that, and indeed should not shy away at tariffs or other measures.
So do you think tariffs should be looked at for things beyond, say, electric vehicles? Do you think that there is a much larger conversation to have?
I think we should. China has profited enormously from the free market system. We've invited them in. Western capital has gone there. Western technology has gone there. And so they should reopen their doors too, and they should play the game. And so wherever there is not a level playing field, we should intervene.
And so one topic where there may be a lot of consensus in Europe, from the right to the center to the left, is defense spending. And you, having sat on the budget committee, you know how difficult some of these conversations could be. Do you think that there could be appetite for joint debt on this topic, that this could unify Europe to get that defense where it needs to be?
Well, we've had a Corona facility where we had more than 700 billion European debt that has been created. We should first take stock about how that went. What were the weak points? And there are a lot of weak points in the way in which the Corona facility has been set up and executed. So we should take that into account. We should not forget that there is still a substantial amount of money left within that Corona facility. So I don't join those who say, now we do another fund and we do another facility and we do this and we do that. Let's evaluate, let's see how much money is left. Let's also see how much of the responsibility of, for example, defense spending has to be taken at member state level. And then see what eventually can be added value of a European initiative.
Well, Johan Van Overveld, thank you so much for your time today, talking about a lot of the topics that we're sort of getting into now, just under a month away from the European elections.
Oliver Crook in Brussels. Thank you very much indeed, with a fascinating conversation there. And a reminder, and Ollie talked about the French President Emmanuel Macron, we are going to be speaking, Bloomberg will be speaking exclusively to Emmanuel Macron later. We're going to hear that interview with John Micklethwaite, Bloomberg's editor-in-chief, 6 p.m. UK time. So definitely, of course, tune in for that exclusive interview. Meanwhile, we're going to be checking in on Spanish politics, because Spain's Prime Minister Pedro Sanchez's Socialist Party has won regional elections in Catalonia. If the party is able to cobble together a coalition, that is a big if, it would be the first time the Catalan region has been ruled by a non-separatist party in more than 10 years. Let's get more then with Bloomberg's Thomas Galtieri in Madrid. Thomas, what are the implications then of the electoral results out of Catalonia for Pedro Sanchez?
Hi, good morning. So, as you said, the Socialist Party won the elections. It's a good result. They got 42 seats, but they fell short of the 68 majority they would need to form a government. So, of course, there's an uncertainty in the region that might also bring some kind of instability at national level, where the Socialists need the supports of both the main Catalan separatist parties to pass legislations, and where they need to still to pass big legislation, including the national budget that has been delayed so far. So that's, of course, as you said, a big if on whether they will be able to form a government in Catalonia, because both the separatist group are seeking a new referendum on the independence of the region, and this is a red line for the socialists. So, of course, we're probably leading toward a deadlock in the region.
OK, and if you get that, then you get renewed elections, of course. Talk to us about the economics, Thomas. Of course, Catalonia famously an economic hub, an industrial hub for Spain. The implications of the politics to the broader national economy.
Yeah, well, Catalonia is the second largest region of Spain, and it accounts for 19% of the GDP. So, of course, there's an intrinsic component, economic component in this political volatility in the region. But more broadly speaking, it's also true that so far the markets haven't been reacting significantly to what's going on in Catalonia, and more broadly the economy, the Spanish economy, grew 0.7% in the first quarter, and is expected to expand also this year and in 2025. So at least for the time being, it looks like the economy hasn't been impacted by the situation.
OK, Bloomberg's Thomas Galtieri, thank you very much indeed on the implications of that vote, of course, in Catalonia, and what it could mean for the future of Spanish politics and the economy. Coming up, we're going to take a look at earnings due this week, including major European telecoms and luxury shares. Our preview then of the earnings story. Plus, Goldman Sachs' CEO David Solomon is going to join us for an exclusive interview as he takes part in the Choose France Summit. That conversation, 3:30 p.m. UK time. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, costs and capital spending cuts will be in focus when major European telecoms report this week. Analysts will also be watching luxury results after Burberry's profit warning back in January. Let's get more then in terms of the preview around the earnings story this week and bring in Bloomberg's Chloe Melly. Chloe, what then will investors be scrutinising when it comes to the telecom earnings this week?
So the guiding metric here really is cash. So most of Europe's telecom companies have guided for a fairly optimistic baseline for cash flow growth this year. So we will need to see how that compares with reality in earnings reports this week, especially because they've been dealing with quite high input costs and wage pressures as well. If we look at individual companies, Deutsche Telekom is said to have particularly strong cash flow growth, which might boost shareholder returns. It's a similar story for Vodafone, exited operations in Italy and Spain, which means it has about 4 billion euros set aside for buybacks. For BT, it's still in the middle of a turnaround, but it could report a return to annual revenue growth for the first time after 6 years of decline. So overall, it's quite a positive story for the sector this week, we're expecting.
Interesting. So cash flow is going to be scrutinised by analysts and investors when it comes to telecoms. When it comes to the luxury space then, Richemont and Burberry, how divergent are these stories? What do we expect? Burberry has its own challenges.
Yes.
What is the setup for the earnings stories for both of those luxury groups?
So as was the case with the fourth quarter reports, we've got kind of winners and losers in luxury. So it's still the same thing, really. And that really depends on branding and target audience. So we've got quite a good resilience in high-end luxury, but Burberry's kind of a middle of the road more so rather compared to Cartier, which Richemont owns. So, you know, that will be illustrated once again this week with Richemont and Burberry. So Burberry is still in the middle of a brand revival initiative. It's coinciding with slowing demand in luxury. So it doesn't bode particularly well for it. I think there's also very soft demand in China, so that puts it in a tough spot. For Richemont, the shares have been one of the biggest sector gainers this year, and the expectations are for strong growth in the jewellery segment, as I said, with Cartier, and a bit of a softer performance in the other smaller segments, because it's quite a tough year-ago comparison as well, a comparison base. So that's the kind of divergence that we're keeping in mind this week.
Okay, very interesting. Chloe, with a really nice setup in terms of the telecoms earnings and the luxury front as well, with Richemont and Burberry in focus later this week. Bloomberg's Chloe Melly, thank you very much indeed. A reminder that the French President, Emmanuel Macron himself, will be speaking exclusively to Bloomberg from the Choose France Summit. You can watch that interview with John Micklethwaite, Bloomberg's editor-in-chief. That's at 6 p.m. UK time. But before that, don't miss out on our exclusive interview with the US Treasury Secretary, Janet Yellen. That conversation kicking off at 3 p.m. UK time. And here's what else to look out for this week, or at least today, I should say. Euro area finance ministers meeting in Brussels. So those conversations will be scrutinised. And then, of course, you do have that Choose France summit that kicks off on Tuesday. So a really big day in terms of some of the announcements. And again, we just had Microsoft detailing some of its investment plans in France, around 4 billion euros for AI and cloud in France. Meanwhile, on the data front, we do get the final German CPI data out as well. And then you have the Qatari Economic Forum starting in Doha. Bloomberg is on the ground, and of course we'll be bringing you exclusive conversations and interviews throughout that event as well. Meanwhile, on the earnings front out of China, Tencent and Alibaba both report on Wednesday. Will that give us any sense that the consumer in China is maybe starting to turn around? And then you're going to get euro area first quarter GDP as well, so a picture on the health of the eurozone economy as expectations remain that the ECB could very well cut in June. And then Russia's President Vladimir Putin beginning a 2-day visit to China. Really interesting given that Xi Jinping is recently, of course, in France and Hungary and Serbia. US CPI data, of course, crossing, in fact, on Wednesday, the inflation print out of the US. Earnings then, you're going to get Walmart and Siemens, and then NATO military chiefs are going to meet in Brussels on Friday. That's after a weekend of activity, of course, in Ukraine, with some gains for the Russian military. Meanwhile, China data, data dump on Friday. Property prices, retail sales, industrial production, all going to be released on Friday after, of course, that aggregate financing out of China contracted for the first time on record since 2005. But the inflation data, of course, was also concerning out of the weekend. The data picture being rounded out of China on Friday. Plenty more coming up. Stay with us. This is Bloomberg.
There isn't, at this time, much evidence, in my view, that inflation is stalling out at 3%. If you take a step back, what's happened is inflation went way up in the United States and in everywhere else in the world.
OK, Federal Reserve Bank of Chicago President Austin Goolsbee speaking there. We're going to be hearing from Jay Powell on Tuesday as well. But the chorus of voices from the FOMC suggesting that they're very comfortable sitting here higher for longer on rates, of course, out of the US, given what's been happening with inflation. Does that change, though, that narrative on the back of the inflation data that's expected, CPI, this Wednesday, of course? Did it adjust that narrative? Here's the picture, and here's what's happened and transpired over the last few months when it comes to US supercore inflation and the acceleration there. The white line is US CPI commodities excluding food and energy, a 12-month change. That's the white line. And then US core CPI services excluding energy and housing. And as you can see, from the start of this year, those lines have started to tick up. In fact, on an aggregated basis, in the first 3 months of the year, you've seen core inflation coming in at around 4.5% from 3.3% in Q4. So that move up, of course, is what's led to the concerns. Are we going to get a restart of the disinflation narrative with that inflation data out of the US this week? Let's flip the board and have a look at what's been happening in China as well, because the credit impulse fell off a cliff with the most recent data for the month of April out over the weekend. In fact, aggregate financing out of China contracted for the first time in almost 20 years. And in terms of money supply, the broader M1 money supply component, that reduced to its lowest level in 2 years as well. Mortgages, house loans, all contracting. That will be a concern from Chinese officials. They launched, though, their ultra-long bonds, so maybe a bit of fiscal support coming through in the months ahead. Plenty more coming up, by the way, including exclusive conversations with the French President, Emmanuel Macron, of course, about trade, geopolitics and international investment. You can hear that interview with John Micklethwaite, Bloomberg's editor-in-chief, 6 p.m. UK time. We're going to hear more about the state of US-China relations and China's overcapacity issues from Treasury Secretary Janet Yellen. That exclusive conversation starting at 3 p.m. UK time. And by the way, Goldman Sachs' CEO David Solomon also sitting down with us as well, 3:30 p.m. UK time. But don't go away yet. Markets Today is next. Plenty more coming up. This is Bloomberg.